This is Scott Becker with the Becker Private Equity and Business Podcast. We try to come to you daily with short business episodes, short private equity episodes, and a lot more. Today, we've got 12 stories that we're following currently, and hopefully you find something here that's of interest and so forth. First, the markets point down today after a great day Friday. The markets are trying to digest a very robust September jobs report that was released Friday. The concern is that robust growth will slow down the Fed in reducing rates further. Second, the NASDAQ is now up nearly 23% year to date. Third, the S&P 500 is up a little more than 21% year to date. Both indexes, of course, having a great year. Fourth, the Harris-Trump race is very close. The general national polls show a 2 to 4 point difference in favor of Harris. The betting lines have it really close to even. The swing states, the 7 or 8 swing states that really make a difference in the Electoral College, are also very close. Fifth, I'll do a short segue or digression on college football. Vanderbilt beat Alabama in a college football upset this weekend for the ages. Few saw that coming. College football is changing significantly. Texas and Ohio State, 2 perennial powers, are on the rise. Indiana is 6-0, and Michigan has lost the new car luster that it had with the loss of Jim Harbaugh. Sixth, Tesla rose on Friday and is now back to up year to date. Amazing to see the resilience in Tesla. Seventh, JetBlue surged almost 15% on Friday as competitor Spirit Airlines points towards bankruptcy. 2 thoughts. The FTC should have let Spirit merge with JetBlue when they had the chance. Second, don't book essential flights on Spirit. Microsoft is up 10% year to date and has a market cap of nearly 3.1 trillion, 3.09 trillion. NVIDIA is right behind Microsoft at 3.06 trillion and is up more than 150% year to date. Apple remains number 1. In market cap, the rankings are Apple 1, Microsoft 2, NVIDIA 3. In college football, it's Texas, then Ohio State, then Oregon. Ninth, Abercrombie and Fitch is killing it. It's up nearly 67% year to date. I know the ads they use are a little bit creepy, but still they're doing great in terms of their return to glory. 10th, the chief strategist at JP Morgan Chase says to be cautious about the ultimate situation with the market, that you could see corrections. Don't get too fixated on us having a soft landing. So a little bit of temperance to all the the rising we've seen so far. Also 10th, the Levin-Becker Economic Fear Index will be released Tuesday. 11th, as the markets surge and at some point may correct, this is a reminder that knowing your own allocation and how you like to allocate your assets between stocks, bonds, equities, as well as also stocks, bonds, cash, as well as also knowing your temperament and having an emergency fund. That's what allows you not to panic when the market gets killed or takes a real downswing. Having your allocation right is so important. I can't say it strongly enough. Finally, 12, one of the core mantras that we live by is that it's critical to know your own business really well, i.e. where your revenues and profits are coming from, who your best customers and people are. Then you start each day, each year, each quarter by reminding yourself to double down on your core customers, your great people, where your revenues and profits are coming from. Yes, you spend 20% of your time, 10% of your time, whatever the number is, looking at new areas, new ideas, pivots. But if you got a good business or a business that's moving in the right direction, we're a constant believer in, this 80-20 rule, which is different than the traditional 80-20 rule, which is spend a huge percent of your time on your most important business lines, your most important people, your most important customers, and where your revenues and profits are coming from. Thank you for listening to today's version of the Becker Private Equity Business Podcast. We'll be back with you later with a couple other episodes, but thank you for listening today.